Hi, I hope this video finds you in best of your health. This is Ritika and we are doing CFA Level 1 Alternative Investments. This is the only reading under this study session called Introduction to Alternative Investments. We are now on LOS B. This LOS requires us to describe categories of alternative investments. So we have to be able to describe and not merely state. So these are the categories of alternative investments that we will be supposed to describe. A. Hedge fund. B. Private equity. C. Real estate. D. Commodities. And E. Infrastructure. Before we discuss them in detail, what are alternative investments? There is no demarcating criteria as to suggest what should be categorized as an alternative investment. However, you can call anything that cannot be categorized as a traditional investment an alternative investment. And now we will discuss each of them one by one in coming slides. And we begin with hedge funds. What are hedge funds? Hedge funds are private investment vehicles typically structured as partnerships that manage the portfolio of securities or derivatives. How do hedge funds work? The hedge funds often make use of short position and leverage to amplify their returns. When it comes to returns, the hedge fund managers are mainly concerned about the alpha part of it. Alpha returns are the active returns, a sort of gauge against the market performance. It is the excess return of investment relative to the return of a benchmark index. They are usually looking for the absolute returns. Moving on to the private equity firms. What are private equity firms? Private equity firms are the institutional investors who mainly invest in either private companies or the listed companies to take them private. How do they operate? Through leveraged buyouts. They use the borrowed funds to finance the investment. Another form of private equity investment is venture capital. Here, investment is made in small scale or early stage companies with huge growth potential. Next, we have the real estate investment. Real estate is the immovable property consisting of land, buildings, natural resources, etc., including both residential as well as commercial assets. We can either make a direct or indirect investment in real estate. Direct investments involve investment in land, building, timberland, farmland, mineral shores, etc. Indirect investments in real estate are made through securitization. Indirect investments broadens the whole definition of real estate. You can make an indirect investment in real estate. It can be in the form of private commercial real estate, both in forms of equity as well as debt. Here you purchase the equity or debt instruments of the entities that are owners of real estate. Thus, the investor has the indirect claim over the real estate property. Then comes the public real estate equity. Such investments can be made through real estate investment trusts or more commonly known as REITs. Here, the investors hold the shares of the companies that hold the real estate. Then there are public commercial real estate debts that can be in form of commercial mortgage-backed securities or CMBS. Next, we have alternative investments in form of commodities. Commodities have long been a part of investment portfolio of investors across the different groups, but it does not form a major portion of investment. Investment in commodities can be done either directly or indirectly. Direct investments can be done through holding the assets physically, and indirect investments can be done by investing in the commodity-based businesses through the investment in futures and funds based on commodity indices. Next, we will discuss the infrastructure. What is infrastructure? Infrastructure is real capital intensive, long-lived assets intended for public use. Traditionally, providing infrastructure facilities to the public was considered as a government's business. But of lately, there has been a privatization in this sector as well. Direct investment in infrastructure can be made by investing in projects that are involved in building toll roads, public transportation, energy generation projects, etc. Indirect investment in infrastructure sector can be made through investing in the companies involved in providing infrastructure facilities. Apart from these alternative investments discussed in the previous slides, there are some other investments as well. These other investments can be made through purchase of some tangible as well as intangible assets. The tangible investments involve jewelry, artifacts, paintings, fine wines, automobiles, etc. And intangible include patents, copyrights, etc. Now a little question for mini revision. An investor is seeking an investment that can take long and short positions, may use multi-strategies, and historically exhibit low correlation with traditional investment portfolio. The investor's goal will be best satisfied with an investment in A. Real estate, B. A hedge fund, C. A private equity fund. Yes, you're right, it is B. The hedge funds. Because with the hedge funds you can keep long and short positions and they focus on active gauge against the market performance, thus they have a low correlation with market returns. So option B is correct. So that was LOS B. We will discuss the next LOSs in the next videos. You can practice more questions on this one. The link is in the description. And if there are any further queries about this topic or any other topic or any suggestion, you can always contact us. We will try and get back to you as soon as possible.